Hey guys, it's a quick video like I promised. This is a video based on three things. One is support and resistance and how to take better SNR level trades. Second is purely candle by candle price action and candlestick psychology. The third one is how to actually make a decent martingale entry so that you can actually make profit in the binary options. So here we go. So this is AD USD chart. This is in the past. So as you can see, I have used a lot of trend lines, a lot of horizontal lines, a lot of rectangle lines. As you can see, I have used it like so much because this is how I make my trades. So these are not just random lines and random rectangles. Okay, so this actually means something. So let's say like, what is a candle? I'm gonna start from the basic. Okay, so that even if there's a small point which you don't understand, it's more easy for you to understand. So this is a candle, right? So candle has a body and a wick. This is called the wick and this is the body. So in a single candle, there's so many variations. For example, this is a normal candle. This is a spinning candle. This is a doji candle. This is a hammer. This is a reverse hammer. This is marubuzu. You get the point. There's so many candles and there's so many stuff. It's just so, you can't even analyze it properly, right? But each candle says a story, and that's the story you need to make better entries. So let me say what I mean by that. So I took this trade here. I mean, this was my trade point. So I'm just going to tell you guys the story behind this price. So we are in the past market, we are a selling market. Okay, the sellers are so much in control, we push the price low till here. But why here? Why did it bounce off just here? So when you zoom at it, you can see there's a small horizontal line over here. So you mark this line. What does this line say? This line says that it is 58,500. It's a new price. So when there was so many sellers entry, there was a new price over here that some of the buyers decided to entry over here. So we did make an entry over here and we did go back up. But when you look at it in a clear way, all these red candles, this also was supposed to be a red candle. But if you look at it, for 10, 20 or 15 seconds, this was a red candle. And when we hit this price, we got back up with a green candle. And this was a green candle for 20 and 25 seconds, and this turned into a red candle. And this was a red candle for 10 to 15 seconds, and this got back to a green candle. So that's the story. We fight it till here, we got back down till here, went back up here. We made a new higher high, but we still made a new lower low. But since this was a buyer's entry, I mean the last time the buyers did enter here, so we got back up again and we did make a new higher high, but the sellers were strong, they decided to push it down. We still came back to the same buyer's entry, so we decided to push the price up to here. Okay, so that's the story. So this is the story you need to frame in your mind to understand like what the price is actually doing. Okay, when you look at this like without any analysis, it looks like just moving the way it does, but it actually moves with the picture. That's the story. That's the story which we need. So the sellers have to enter at some point of time. So there's a small order block over here. So the last time the sellers pushed the price down here like dominantly. Okay, so what does dominant mean? As you can see, there's multiple red candles, right? 1, 2, 3, 4. This is continuously 4 red candles, so the price had to go down. So when the buyers entered up till here, last time the sellers entered strongly over here, so the sellers entered again over here. If we had broken this up and went to a new higher high, the sellers would have entered here or near this round number. That's it. They have to enter over here. That's how the market works. Either it's here or here. So the last time sellers entered over here, this time the sellers entered over here. That's why we have multiple trades over here. The buyers did try to push it up, but the sellers were strong. They pushed it down again, and we had a small support and resistance level over here, and the buyers did push it up, and we got back down again. We acted on the same level, and the buyers did push it up. But since it's an overall sell trend, overall the sellers are in power, the sellers just push it back down even further. So we got back down here and we got back up here. Why did we got back up here? Because we hit the same price range over here. Now I think you guys are starting to understand a lot about the prices now. So this was, like I said, you guys know how to analyze candle by candle now. Now what's the overall picture here? There's a lot of dojis over here. Doji means the buyers and sellers are equally fighting. So this is a candle, and this candle is putting, the sellers are putting pressure from the upside, the buyers are putting pressure from the downside. They're both equally powerful. Okay, but since the last time there were some buyers who actually moved the price to new higher highs, the same buyers and new buyers decided to push the price even more higher. So how can you say this? So when I look at it like this, they didn't put the price down over here. So each time the price went down, they decided to push it back up even more again. And even this could have come up till here, but the buyers didn't let it happen. Okay, so that's why you get, it's a small example, like you can say that okay, the buyers are actually in control, but you cannot actually tell when this move is going to happen, and that's why most of us fail. And you cannot say like okay, it's going to happen now, it's going to happen. No, it's never going to happen when you're going to say. It's going to happen when it wants to happen, when majority of the buyers are ready to put the money in. So how do we trade here? We don't trade here, that's the thing. Okay, and I'll tell you when to trade. Okay, we got back up here, the sellers were strong, we pushed it down, the same round number, we decided the buyers were still strong, we pushed it up, and this time the sellers didn't let this go to a new higher high like this, but decided to stop the market from here itself and decided to push it down. And when the price came till here, there was one big green candle, but there wasn't much buyer support over here, so we came down here because there was another price number, this 58,400, so we decided to push it up here again. Okay, now why is this important? So last time they supported over here, so this time they are supporting over here. So when you look at this, like forget all this, okay, we don't need all this for now, but when it came over here, we hit this number again and we're gone up. But the sellers were still strong. Why were the sellers still strong? Because I'm just going to put another rectangle for you guys. Okay. Okay. This support level turned into a resistance level. So the price bounced back up, we went back down, and now this is a resistance, we broke it, now this is a support, now this is a resistance, now this is a support, this is a resistance, and we broke it. So that's how it frames. This is called the SBD level. Okay, and this is the best place to take a trade. This exactly right over here. Now why do I say that? Because once the price has started to like first time we draw a trend line over here, the price goes up and we came back here again, this is a good place to trade, and this is a good place to trade, but not here and not here. This and this is the only good place to trade over here. Okay, if even this but comes under, like, you have your risk management and position should be accurate. This doesn't happen like this all the time. It may even may go down or something. So this is the best place to trade, and this is the best place to trade. So how do you trade? See, the price jumped from here. It could have jumped from here also, it could have jumped from here also. But how do you say? Because you can never say. So this is why I use martingale. So what martingale does is, I'm gonna show you my recent trades. So I've made an investment on AUD and ZD over here. So I kept three $40 trades to the upside, and I failed over here. Okay, but then I placed another trade for $80 on the same up direction, and I won that. So this is a different chart, but this is the example I'm trying to say. So we supported over here. So one more time, the buyers will support over here. We have two reasons why. This is a new price range, and we have a trend line. So we have two reasons to take this trade, and we can see there are a lot of buyers are entering in the market. So we have three reasons to take this trade. So when you have more reasons, the more confident the trade will be. So when do you take the trade? This is the best entry. Why is this the best entry? Your trade should be, if you're going for a call option, it should be below the price line. Okay, this price line, it should be below it. If you're taking a put option, it should be above it. Okay, because there are a lot of trades, like you guys, if you guys are placing a 1 minute trade, it will be green for it will be green for the last 55 seconds. Okay, and for the last 4 seconds, you guys will lose it. So that the only reason for that to happen is bad entry. And what is that's what I'm trying to tell you guys over here. So if you actually place a trade over here, even if the price comes up till here, a lot of people will be interested to buy here again, so that you won't lose this trade. This is a market. You are expecting other people to push the price for you so that you can make the money. You got it? There's no, either you can win it by like hedge funds and stuff who push a lot of money in at the same time, or you can get crazy movements from the market and get lucky, or you're expecting other people, other buyers, majority of the buyers to buy at the price that you are willing, that you're at. That's how you make your winnings. Okay, so this is the best place to trade. So I'm gonna place a $2 trade over here. Okay, but the price didn't respect this. It came back down here. The buyers or sellers may manipulate the price so that a lot of people don't enter in. Okay, that happens a lot. It's a forex market. It happens in any market as well. So the price comes down here, but remember, I already placed a $2 trade for 2 minutes on the upside. I was about to fail this, and right after here, the price gave a big engulf, and we're moving to the upside. So I placed another $4 trade over here. Okay, $4 or $5, it's upon your risk management. So even if I lose the $2, I'll win the $4, I'll recover whatever I lost and still make a little bit of profit. That's the only way, only way to actually make money in this game. There's no, I mean, you can't be for sure, you can't blame the market, you can't be that precise. The market moves depending upon how many people invest at the same time. I mean, there's no point, okay? So this is how you make the trade. Again, so we came back to this level. I'm placing a $2 trade over here. I failed it. We are going back down again. I'm placing a $5 trade here. I won it, and that's it. The trade is over. I've recovered it. I made some profit. That's how I make all my trades. So this is a clean example for you guys. 3 $40 trades, lost. 3 $80 trades, won. I increased my balance. So that's it. That's the entire thing that I'm trying to tell you guys. And I think this video is 13 minutes. I wish I could have said this sooner, but there's no actual way. But when you look at the charts like this and understand where is actually the best entry, you won't gamble your money. So when you're so confident about your trades and you still lost, it's okay. It's the market. It's not perfect. Neither is your entry or neither is your analysis. But all we need to do is we need a good edge. We don't get that by indicators. We only get that by price action. Okay. So we hit the market over here. We got back down. We got back up again. And why did the sellers enter over here? Because the last time sellers entered over here. Okay. Now you can see the big picture. And we had a sideways trend line where the buyers did support the price, and we did break off from here, This was a new price, 58,600, and we broke it off to higher highs, and we made it till here, and we dropped here again, and we made it till here, we dropped here from again. So why did we drop here? Now you guys can answer this for yourself, I believe. Because last time majority of the sellers entered here. Okay, either they entered here or they will enter on the next price number or somewhere in between. So you guys have to be patient enough. Okay, and we came back down here, and we started to bounce from here, and we had this sideways market, and we broke off from here. So instead of we thought this was a small uptrend, and we're basically back again to downtrend. Okay, this is how you analyze the market step by step. So this is, I think it was like half an hour ago or 1 hour ago, I don't know. But since there was so much downtrend and the buyers decided to come back here again. Why did they come back here again? The last price the buyers took was 58,037. So that means that there is a big round number over here. What does a big round number mean? A big round number means a number with a lot of zeros. So if it's 58,037 over here, that means we are 58,000 level. We are near the 58,000 level. So the more zeros, the more support or resist is going to do. And that's why we had these 3 green soldiers. So there's a higher probability that is going to go in the uptrend. But this is your confirmation. But you shouldn't trade on these type of places. You trade on these type of places. Okay. So in my previous examples, what's the best place to trade? Trades over here. You put $2 here, you lost it. You put $4 here, same up direction, you won. You put $2 here, you lost. You put $4 here, you won. The same goes for everything. But it depends upon your balance. Okay, you shouldn't be greedy. You shouldn't panic and enter. You should enter at the right spot as much as possible. And if that right spot is below a round number, that's even better. If the right spot is, many people should be willing to enter there, and that's when you will not lose to the last 5 or 4 second trades. So I hope this video was helpful, guys. So this is, I think I've talked about best support and resistance, best martingale entries, and best candle by candle theory. This is 17 minutes. I'm not going to be able to upload this, but I don't know how I'm gonna upload this. Maybe I'll share a link to you guys or something. Cheers. Any doubts, you can DM me. I'll help you guys out. I don't do signals. I don't charge you guys anything. But I just want you guys to be successful. That's it. And let's get all the money from the broker. They had our money long enough. Have a good one, guys. Bye.